right. Welcome to the show. My name is Brian Tague, your host, and I am here with Bill Exeter, a nationally respected expert in 1031 exchanges, self-directed IRAs, and 401ks, land trusts, and specialty holding escrows. With decades of experience, he has guided countless investors through complex tax-deferred strategies and alternative investment structures with clarity and precision. Bill is known for taking highly technical concepts and making them easy to understand, helping people protect and build wealth through smart structuring and long-term planning. Bill, it's an absolute pleasure to have you on the show. So let's jump in.
Likewise, thank you for having us. Happy to be here. And that's probably why I have no hair up here.
No, you're a big deal. And that's why I wanted you on the show is I know you have a corporate office, but you're scattered all across America in many states. So I assume you didn't start there. You've grown and grown and grown. So to give us your kind of backstory on the business and starting it and how you got to be to where you're at today.
Sure. This is my 41st year doing 1031 exchanges, trust services, what have you. I worked and managed Chicago Title's West Coast Trust Company and 1031 exchange operation for 13 years. And then toward the end of that process, our team came to us and said, we need to go start our own thing. And that's kind of what started the thought process there. And lo and behold, there we are. So we started the Exeter Group 21 years ago, and here we are today. And it just kind of grew. It's been a lot of fun. It's, things just keep happening and keep moving forward, and we just keep pushing forward. And now we have offices in every time zone. So I have a hard time kind of remembering, okay, what time zone am I in today?
Right. No, that's amazing. So, and you're essentially now you're at the top. So what is your day-to-day involvement on that? I mean, your CEO style, are you still heavily involved in meeting with clients, or are you managing different branch managers? How are you structured today with your life?
Kind of both. We're still, growing and we have regional managers, regional offices, what have you, but I'm still very involved in the day-to-day aspects of things, meeting with clients and advisors. Everything we do is so technically driven. It's, technical tax, technical legal, and what have you. So, it's when you're the CEO, it's still very much a get out there, meet with the people, and help with the more complicated transactions. And it's good. It keeps the brain cells moving. So that's all good. And I find too, over time, a lot of CEOs stop going out, and you lose focus and you lose touch with clients and advisors and what they really need and what's going on out there. So I still go to trade shows and do seminars and webinars and get out there and meet with clients because it's the best way to hear what's going on.
For sure. Yeah. You don't want to go astray and start solving problems that don't necessarily exist or think you're going down the path. But if you're not, you got to talk to the people. So you're making sure you're solving the right problems and helping find the right solutions. So
absolutely. Because they usually went down a different path.
Yeah. So is it safe to say you have a variety of revenue streams in your business, right? So we're talking 1031 exchanges. That's what a lot of people know. But based off that intro too, it sounds like you're doing a lot of other stuff. Do you refer to them as different income streams? Is that how it looks, or services, or do you not break it down that way?
We do. It's, if you go back a ways too, we did not start our trust company right off the bat. And coming out of the 2008 recession, which kind of dragged on until 2011, 2012-ish, we thought, if we want to take this to the next level, we need to be regulated. And the 1031 exchange industry has no licensing or regulatory capability. And we thought, well, we want to do that. It's the right thing to better protect the clients. So we kind of looked at everything and said, well, we managed a trust company for Chicago Title. Let's go down the same path. So took a couple of years of going through that whole process and launching the trust company. So the primary reason was to better protect the clients, make sure their funds are clearly held as client trust funds. But the ancillary benefit was now we can launch other products, which help diversify the revenue streams. And, I've been doing this for 41 years. 1031s have been around 104 years now, but you never know. They could just go away like that.
That's a true statement, and I know there's been some scares over the last few years as well, and like, oh, things changing, so you've got to be in depth. But yeah, you've got a long 41-year ride at this, which is great. And there's like you said, so let's talk about those ancillaries, right? So business owners, typically will either go deep and double down and just get more volume, more volume, more volume. Some people will go wide and spread out into those ancillaries, those feeder companies or the support companies, and have the different help. It sounds like you've almost done both, because you have the ancillary, revenue streams, but you're also in multiple states across North America, which is very impressive. That's hard to do. Did you do that all at once, or did one happen before the other? Did you go, yeah, how did that happen?
Kind of both simultaneous. We didn't necessarily go into specific markets on purpose. We went into markets where we found the right person. In our industry, it's tough to find somebody that's got the background, the experience. A lot of people don't like technical stuff like that. They they just can't. Their head doesn't work the way a tax or legal topic works. Um, so if you find the right person, then we go, okay, where can we put the office to support that? So that's kind of how we got the branch office locations. Our Honolulu office was a scenario where a group we work with came and said, there's only two major exchange companies over there. We're getting a lot of complaints about them. I think this is the right time for you to open an office. And I'm like, okay, let's do it. So
Are the regulations quite different though? I mean, do you have to follow the state in the 1031 exchange? Do you have to follow different state guidelines, and which makes it difficult, or is it essentially a cut and paste?
it's almost cut and paste. It's a federal tax code. Most states mimic the federal tax code almost exactly the same. Few states are a little different. California is a little quirky, of course. But then you really have the state requirements for registering the entity, filing to do business in the state, things like that. So just a little quirky, but it's not that much of a big deal.
And if you looked into a lot of when you're talking bigger companies that are multiple states, a lot of people are going centralizing right now. Have you looked into the centralizing aspect of it and totally shaking up your org chart and doing it from a bigger top down? Or are you, again, if it's not broke, don't fix it? But has that been part of the thought process? You're a savvy business guy.
We certainly think about it all the time. The challenge is you've got to have people who review the technical stuff. I see a lot of competitors who have tried all sorts of ways to streamline and what have you. So you've got like every industry, you got the big four. So one of our competitors in the big four, they've centralized. Now clients, when we talk to them, they complain. They go, I can't go in and visit the person I'm working with. If I try to call, they've got gatekeepers. I can't get through to them. So we've always kind of been kind of in the middle. We've centralized the process of operations and administration in really two primary regional offices, but there's still ancillary as well. And so I guess it's kind of a blend of the two. And we kind of address it from the perspective of what works to best support the client.
Sure. And I love that. And yeah, there's no right answer to the question. I was just curious on you're right. Cause you can lose the customer service approach of that side of it. And that's where a lot of the business comes, and the referrals and the repeats. And yeah, if you get one bad experience, there's competitors out there to go to and different people. So I was just curious that's been a big buzz on these things as this podcast is unscripted, but a lot of business owners go down that path of the centralizing the conversation, at least. So I was curious, because you're doing well, and it's hard. If it's not broken, don't fix it.
That's right. It's important to keep rethinking that, because, times change. And if you're not constantly thinking about how can you reimagine the business, then eventually you're going to fall behind the times.
And there's many case studies of that out there still today. And you're wondering, wow, they're still in business. They're still in business. Like, I won't name any. I mean, these big franchises that haven't even adapted. I'm like, how are they still in business? So
That is true. It's tough. I mean, yeah,
Yeah. So no, this is good. This is good stuff. So let's talk about, I love the approach of the people, right? So you find you have the right people and you're building the business around them, which is brilliant and hard to do. What about retention? How difficult or easy is it in this industry with retention? Because the people are subject matter experts essentially in their fields. So how do you combating that, I guess?
great question. It's in fact, a lot of our world kind of revolves around title and escrow services. A lot of the exchange companies are owned by title or escrow companies and what have you. One of the things that they learn quickly, if you work for one of them, is when the markets are really great, they hire. When they're not so great, they lay off. We don't lay off, except for the 2008 recession where we kind of were forced to. We have never laid off. So if business drops, that's okay. We just suck it up and deal with it because we don't want to lose our folks, and they know that. So you could always go somewhere else and get a higher salary, but you're also one of the first that gets cut when the market's not so good. And then we try to be a family. So we really try to manage our group as a family. So it's very different. We have, people who bring their pets to work. We have a little tray with our bourbon for Friday afternoons. I mean,
Very cool. No, that's great. And I was looking at your website, and you just have a great looking staff. They all look happy and they're friendly, and it just the perception shows that they want to be there too. So it's hard these days with people. They're always jumping for the next dollar and cents, or somebody yells at them and they're sensitive and they're like, I'm going somewhere else, so it's hard to retain people these days in a lot of spaces. So clearly you're doing well.
it really is. And as you asked the question, I was kind of thinking most of our people have been here for at least 5 years or more. We've got four that have been here more than 15 years. So we've got a really good group of folks that have been with us for a long time. The people we've lost has been either medical or childbirth. So that kind of is what it is.
What are your future plans? Are you planning to go into different states, or do you have other people you're targeting? Do what are your goals with the business? Or are you just cruising along, fat, dumb, and happy? Like, how are you?
Yeah, we're always looking to recruit. The one thing I don't want to do is try to steal people from competitors. We just put the word out. We're looking, and if you're interested, contact us. So we don't proactively try to recruit. I wouldn't want them to proactively recruit against us. So I think it's just professional courtesy. But we get people who go, I'm just not happy, and they'll reach out to us, and then we can kind of go from there. So we are looking to grow. We are looking to recruit folks. Most of our other product lines are relatively young, so we're absolutely looking to build on those as well and recruit people there too. So especially, 1031s have always been our biggest product, probably always will be. Self-directed IRAs are number two, and that's really what we're focusing on growing right now too.
So the 1031 that most people know, and over the last however many years now, there's the reverse 1031 exchange. Is that still happening? Is that still a thing? Do you do a handful of those, or I know they're difficult?
Yeah, they're much more complicated and more expensive. Most people can't pull them off, but they've actually gone up in terms of the percentage of our business. So historically, reverse exchanges are about 3% of our business, which tells you they are complicated, right, and most people can't pull them off. But today it's about 4.5%. Okay. So it's grown. It's a crazy market, difficult market. Interest rates are tough. Going out and finding product is tough. Sellers aren't willing to sell. So it just creates a lot of dynamics there. The reverse takes a lot of the risk out of the process because you get your new property and buy it and you've got it. You don't have to worry about can you find it, but it's just more complicated. Okay. So personally, if I were to do it, I always do a reverse, but they're not easy.
Yep. What about the cyclical market? Like, where does 1031s ebb and flow with? What's the driver? Is it the it's a ripple effect. So is it the interest rates, or is it, where are you guys at this year compared to 3 years ago? Are you doing more transactions, less? Is it the same as the real estate transactions percentage wise? Like, how do you look at the metrics, so to speak?
It's similar to real estate in general, but our 1031 exchanges are focused or only qualify for rental, investment, or business use property. So that's kind of a subset, if you will. In fact, last year we took a hard look at the business and reviewed a lot of metrics, and they are very tied to interest rates. It's just amazing how close it correlates to interest rates and has for decades. So that's the biggest issue. But we've also seen that the industry doesn't publish guidelines, results, or what have you, but there's certain things you can look at. And we don't cut back. So when there's a downturn, most people cut back on sales and marketing. We don't. So you can see that our market share has grown, especially during the downturns. So it's just kind of steadily up. The funny part is, we shut down when we were ordered to shut down for COVID. And we were down, working from home. Literally in less than 24 hours, our entire team was working from home with no hiccups. We just pulled out the old disaster recovery plan and let's do it. And it worked fine. And about 3 months in, we had a significant downturn. But 3 months after that, it exploded. And the 2 years after that were really good 2 years, but I'm not sure I want to go through that again.
Right. No, we all rode that wave on all different sides. My background's investing, but I'm licensed too. So we've had some good years during that. But yeah, that was fun times.
It was crazy, exciting at first, and then after a while, you're like, oh, this has got to stop.
Yeah. No, that's good. So, okay. So, and I can see why interest rates are the driver in your business as well, just because, like any investor, it's an ROI thing. And if the interest rates are higher, the ROI is less in theory, and, depending on what the prices are doing. So people aren't necessarily trading properties at all. You're sitting on something. So, because
absolutely. And what's interesting this time around, or I guess in most markets like this, is you get investors who go, I can't afford to buy. If I bought another property, I'm going to pay anywhere from 6.25% to maybe 7% at the top. And my response is, I don't know if you can not afford to buy, because right now, if you buy, you're going to, let's say you pay 7% worst case scenario, but there's not a lot of competition. So you can get out there, negotiate with the seller, probably get the price down. That results in lower property taxes and all that stuff. And then, 6 months, 12 months later, when the rates come down even further and all the buyers jump into the market, you're done. You've already got your property. All you have to do is refinance at a lower rate. So now's the time to buy, in my opinion.
I'm with you. It's the same conversation we have on the residential side as as your primary residence. It's not, you can get some deals out there right now. But the interest rates, in theory, they're going to go, hopefully go down. That's what you're banking on. So you can't make a frivolous, irresponsible decision with the assumption they're going to go down, and they don't, and now you can't afford it. But you're right. That's the game right now, is to be buying So I'm speaking from past experience. I try to buy, whether it's intentional or an accident, but I seem to buy all of my investment properties between Thanksgiving and New Year's. That's just how it looked. Looking back 25 years of investing, that's usually when it happens. So I'm just curious, does your 1031s spike during the Q4, or are you pretty stable throughout the year?
We certainly have cycles, and it's actually the flip side. So things start to pick up usually around mid-March, and it's just kind of like a bell curve through the summer. October, it normally starts to slow down a little bit, although this October it's actually up. And then November, December, and January, February, those 4 months are really our down months. And then back to mid-March, it takes off again. But I think I like your comment that you either do it on purpose or by accident. So it could be accidental brilliance. I'm not sure.
Yeah. Well, so now, and as I said that, and then as you were speaking, I'm like, well, the ones that I'm buying Q4 and early, basically Q4, those aren't actually 1031s. Those are starting fresh. So which would make more sense, because I'm not going to, in theory, sell a property in Q4 because it's not the greatest time to sell. So I guess that would make sense. I'm going to sell it, maybe Q3 and then essentially buying Q4, but I'm not that organized to do that either. And I like to hold my stuff too. So,
yep, absolutely. I'm a buy and hold guy kind of too as well.
Right. No, this is good stuff. So, let's see, what else? I mean, I'm just impressed by you. I want to talk about your business, and I have it here. So your headquarters is in San Diego, but then you have offices. So San Diego, Los Angeles, Honolulu, Seattle, Fort Lauderdale, Phoenix, Cheyenne, Wyoming, and Chicago, Illinois, with trust companies also in Wyoming. So, you're all over the map. And I wanted to put that out there because for people listening, if they are first time 1031ers and they just, or again, I keep saying 1031 because that's what everybody knows. But again, you do all of the services. You have self-directed IRAs, 401ks, land trust, and specialty holding escrow. So you have a bunch of services. If somebody is looking for support and needs the help, or just has questions, and they're in or around any of those cities I just mentioned, what's the best advice that you can give them? Is it an Instagram or a Facebook or a LinkedIn, or is it on a website? How can they reach you?
Great question. I guess my response would be it depends on how they like to learn. Some are visual, some like to read. It just kind of depends. So we've got a YouTube channel out there under the Exeter Group of Companies that just has tons of webinars that we've recorded, podcasts, all sorts of things out there. So if they want to go through and listen to those, we've got ones that are specifically on unraveling the mystery of 1031s or self-directed IRAs, et cetera. Some people like to talk and just ask questions. So we are more consultative. They can give us a call. And, if it's a 15, 30, 45-minute call, that's okay. So we walk them through the process, answer any questions they might have. So really whatever they prefer.
I love it. That's such a good answer. So it's a great answer. Yeah, because that's as any good businessman knows, is you have to be able to talk to the people at their level. And that doesn't mean intelligence level. That means their method of communication as well, which is brilliant. So,
absolutely. Yep. Everybody's got a different way of learning. So we don't have a one-stop shop kind of way of approaching it.
All right, let's talk. So we got a couple more minutes here. This is good stuff. I want to know, let's back up. I usually start with this question, and I didn't. You're one of the first I don't start with this, is what is your background and how the heck do you get into 1031s? You can go back as far as elementary school or middle school if you want. People start at different things, but I love to ask this question because I like to understand the psychology of not only how you got into this industry, but how you became such a brilliant business person within the industry. But I think I like to think it starts back at childhood. So walk us through that, relatively quickly. I'm curious.
Sure, absolutely. Well, I guess I would call it accidental specialization. You never go to college going, I'm going to be a 1031 guy.
Right. Well, that's in most industries. You're like, how the heck did you get into this? That's why I like to learn these things.
Hey, you look back going, wow, that was different. My education is in accounting and finance, and I got into working for a commercial bank early. That was in 1980, and by 84, I was controller of the bank. And the chairman started a 1031 exchange company, and his attorney said, do not have the escrow subsidiary run it. We think that's a problem. So he threw it at me, and I was like, the heck is a 1031 exchange? And a couple months after that, UCLA had a 2.5-day program in 1031s. I took that. I actually now teach that class. So it's been a fun kind of a 360 there. But that's kind of what got me into it. The bank started this. They threw it at me. I kind of took it and ran with it, and my career did kind of a left turn, got me out of commercial banking and got me into more fiduciary, trust operations, 1031 exchanges, self-directed IRAs. And although everything we do for the most part is focused on real estate to some degree. Yeah. So, we don't like our self-directed IRAs. I mean, most people are used to going to a brokerage firm and opening an account, buying, stocks, bonds, or mutual funds. And although we can do that, but our niche, our sweet spot is people who want to use their retirement accounts and buy real estate or deeds of trust or mortgages or private equities, private funds, whatever might be inside the IRA, which most brokerage firms, banks can't even do. And so we kind of go after those areas that other trust companies don't want to touch.
That's amazing. I love it. And I imagine you have some good partners within the financial planning industry or the trust and probate lawyer space as well, because those are kind of handoff support mechanisms. Is that accurate?
We do. Yep. Most of our partners, if you will, or referral sources would be, somehow attached to legal, tax, or real estate. Since we're so focused on real estate, we're just kind of a very unique operation compared to a lot of them.
Let's go back. So accounting and finance. Why accounting and finance? What made you go in that route? I want to go back even further.
Oh God, that's in the family. Okay. In fact, I'm the only one that is not a CPA in the family. I just thought I didn't want to sit down and have to put in like 2,000 hours of audit. That just didn't appeal to me. Auditing what somebody else did the last year just wasn't exciting. So you kind of go back and forth. God, should I do that? My whole family's done it. No, I don't want to do that. And then when I was promoted to controller of the bank, I thought, no, I'm not going to give this up. Right. So kept going.
Bill, absolute pleasure having you here on the show. I think there's some good stuff, some good nuggets, and what you've done is so impressive. I'm looking forward to continue to watching you for another decade and more and seeing what you guys do. So thanks for being here and opening it up and sharing everything.
My pleasure. Much appreciated.
All right. Take care.